Wall Street has seen its fair share of legendary figures, men and women who have shaped the markets, rewritten the rules of business, and amassed fortunes that most could only dream of. But few names evoke as much intrigue, admiration, and controversy as Carl Icahn. He wasn't just an investor. He was a warrior, a man who would take on the mightiest corporations, demand changes, and force them to bow to his will. Some called him a corporate raider, others labeled him an activist investor, but one thing was undeniable: when Carl Icahn set his sights on a company, nothing would remain the same. To understand how he changed Wall Street forever, we have to go back to the 1980s, an era when corporate America was flush with cash, CEOs held unchecked power, and shareholders often had little say in how companies were run. Icahn saw an opportunity, one that would make him a billionaire and redefine the power dynamics of Wall Street. Born in Queens, New York in 1936, Carl Icahn wasn't raised in wealth or privilege. His father was a teacher, his mother was a nurse, and like many ambitious young men of his time, he saw Wall Street as a battleground where fortunes could be made and lost in an instant. He studied at Princeton, later dropped out of medical school, and eventually landed a job as a stockbroker. But Icahn wasn't content with just selling stocks. He wanted power. He wanted control. And soon he found a way to get it. By the late 1970s, he had built his own investment firm, Icahn and Company, and developed a reputation as a brilliant, ruthless investor. He had a simple but aggressive strategy: find companies that were undervalued, buy a controlling stake, and push for massive changes that would unlock their true worth. If management resisted, he would launch a hostile takeover and remove them himself. The art of the hostile takeover. The 1980s were the golden age of corporate takeovers, and Icahn quickly became one of its biggest players. Back then, many public companies were run like personal fiefdoms by CEOs who paid themselves huge salaries but failed to maximize shareholder value. Icahn saw these inefficiencies as golden opportunities. One of his first major battles came in 1983 when he set his sights on Tappan Company, a manufacturer of kitchen appliances. He bought a large stake in the company and quickly pushed for changes. When the board resisted, he forced a sale of the company to Electrolux, making a $2.7 million profit in just a few months. This was just the beginning. His biggest and most controversial takeover came in 1985 when he took aim at Trans World Airlines, TWA. It was a struggling airline with bloated costs, mismanagement, and a stock price that had been stagnant for years. Icahn saw an opportunity not just to make money but to change the way companies were run forever. What happened next would shake Wall Street to its core. Carl Icahn's move on Trans World Airlines, TWA, in 1985 wasn't just another corporate battle, it was a seismic shift that sent shockwaves through Wall Street. It was the defining moment that established him as one of the most feared and admired figures in finance. At the time, TWA was in trouble. Once a leading airline, it had been plagued by mismanagement, rising costs, and cutthroat competition from up-and-coming airlines like American and United. Its stock was languishing, its leadership was ineffective, and its future was uncertain. Icahn saw this as the perfect setup for one of his most audacious moves yet. He began aggressively buying TWA stock, acquiring enough shares to gain substantial influence over the company's decision-making. But Icahn wasn't content with being a passive investor, he wanted control. By 1985, he had amassed more than 20% of TWA's shares, putting him in a position to dictate terms. His reputation had already spread across corporate boardrooms, and executives feared what was coming next. The existing management at TWA wasn't willing to go down without a fight. They attempted several defensive maneuvers to prevent a hostile takeover, including a poison pill strategy which would dilute the stock if any single investor acquired too large of a stake. But Icahn was relentless. He outmaneuvered TWA's leadership by launching a tender offer, encouraging other shareholders to sell their shares to him at a premium. As more investors realized they could make a quick profit, they sold out to Icahn, making him the largest shareholder with de facto control over the company. Once he secured his position, he forced out the existing CEO and installed himself as the chairman. It was a ruthless but brilliant victory, marking one of the most dramatic hostile takeovers in corporate history. But the battle was far from over. Now that he controlled TWA, Icahn had one goal in mind: extract as much value from the company as possible. His strategy was controversial but highly effective. Sell off assets. Icahn began selling TWA's most valuable assets, including its profitable routes and airport slots, to raise cash. Take the company private. he engineered a leveraged buyout LBO, borrowing billions to buy out other shareholders and take TWA private. Cut costs and slash jobs. Icahn aggressively reduced expenses, which included layoffs and budget cuts to improve profitability. At first, his plan worked brilliantly. TWA's financials improved, and Icahn personally made over $469 million from the deal. But in the long run, TWA suffered immensely. Stripped of its best assets and burdened with massive debt, the airline struggled to compete. By 1992, it was forced into bankruptcy, a move many blamed on Icahn's aggressive tactics. Was Icahn a ruthless corporate raider who destroyed companies for profit? Or was he a financial genius who exposed weaknesses in corporate America and revolutionized shareholder activism? That question would follow him for decades. But one thing was certain: Wall Street would never be the same again. Icahn had proven that investors, not just executives, could dictate the future of companies. And soon, many others would follow in his footsteps, using his playbook to challenge corporate giants. But Icahn wasn't done yet. His next moves would cement his legacy as one of the most powerful figures in financial history. The TWA takeover had established Carl Icahn as a force to be reckoned with. He had proven that a single investor could shake the very foundation of corporate America, forcing CEOs to be accountable not just to themselves but to the shareholders who owned the company. But while the TWA deal made him famous, it also made him infamous. Critics labeled him a corporate raider, accusing him of gutting companies for personal profit. The media painted him as a villain, an aggressive capitalist who destroyed businesses for short-term gains. Yet Icahn didn't care. He believed in a simple truth: most companies were poorly run, and the only way to fix them was to shake things up. Now, armed with billions in profits, he was ready for even bigger battles. By the late 1980s and into the 1990s, a phenomenon began to take shape in the stock market, something traders started calling the Icahn lift. Here's how it worked. Icahn would announce that he had taken a position in a company. The stock price would immediately jump as investors anticipated major changes. The boardroom would panic, knowing that Icahn would soon be demanding massive changes. Cost cuts, restructuring, or even a sale of the company. It became a pattern that repeated over and over. Companies feared him, investors loved him, and Wall Street watched his every move. His targets included some of America's biggest companies. Texaco. Icahn acquired a significant stake in the oil giant and pressured management into restructuring. RJR Nabisco. He attempted to break up the company but later sold his stake for a massive profit. Blockbuster. He made aggressive moves to take over the struggling video rental giant, though the industry's collapse ultimately doomed the company. With each battle, Icahn's legend grew. Unlike other corporate raiders who faded away after the 1980s, he adapted. He evolved. And he became even more powerful. As the 2000s approached, Icahn reinvented himself. The era of hostile takeovers was fading, replaced by a new movement: shareholder activism. Instead of buying companies outright, he began using his influence as a major shareholder to demand change without necessarily taking control. It was a subtle but critical shift. No longer was he just a corporate raider. He was now an activist investor, fighting for the rights of all shareholders. And with this new approach, he took on some of the biggest corporations in America. Apple. In 2013, he pressured Apple to return more cash to shareholders through stock buybacks, helping fuel a massive rise in Apple's stock price. eBay and PayPal. He pushed eBay to spin off PayPal, unlocking billions in value for investors. Herbalife. He waged a high-profile battle against hedge fund manager Bill Ackman over the future of the nutrition company. At every turn, Icahn proved he was still the ultimate Wall Street warrior. And now he wasn't just making money, he was reshaping corporate America itself. But his biggest battles were yet to come. By the 2010s, Carl Icahn was no longer just a Wall Street legend, he was a global symbol of financial power. He had transformed from a feared corporate raider into an activist investor who could shake up any company at any time with just a single move. The Icahn lift was now a well-known phenomenon. Whenever he took a stake in a company, the stock price would skyrocket in anticipation of his aggressive push for reforms. CEOs who had once dismissed shareholders as passive investors now had to answer to Icahn or risk losing their jobs. But unlike other billionaires who sought the limelight, Icahn remained an outsider. He had no interest in being a polished corporate figure. He was a street fighter at heart, a man who saw corporate America as a battlefield where only the smartest and toughest survived. Now, with billions of dollars at his disposal and decades of experience, he was about to take on his biggest challenges yet. In 2013, Icahn made headlines once again when he announced that he had taken a massive stake in Apple, the world's most valuable company. At the time, Apple was sitting on a staggering $150 billion in cash, but its stock was underperforming. Icahn saw this as a massive failure of leadership. Instead of letting the cash pile up, he demanded that Apple return money to shareholders through stock buybacks and dividends. Tim Cook, Apple's CEO, initially resisted, but Icahn was relentless. He fired off public letters, gave media interviews, and used every tool at his disposal to pressure Apple's board into action. Eventually, Apple caved to his demands. The company announced one of the largest stock buyback programs in history, over $100 billion returned to shareholders. Apple's stock surged and Icahn made a huge profit on his investment. It was yet another victory for Icahn, proving that even the most powerful company in the world wasn't immune to his influence. One of the most dramatic moments in Wall Street history came in 2013 when Icahn clashed with billionaire hedge fund manager Bill Ackman in a public feud over Herbalife, a global nutrition company. Ackman had shorted Herbalife stock, betting that the company was a fraud and would collapse. He publicly declared that Herbalife was a pyramid scheme and that its stock would go to zero. Icahn, however, saw an opportunity. He believed that Ackman was wrong and he bought a huge stake in Herbalife to drive up its stock price, directly opposing Ackman's bet. The feud between these two billionaires exploded on live television in a heated CNBC interview. The two men screamed at each other, calling each other liars, frauds, and worse. But in the end, Icahn won. Herbalife's stock surged and Ackman lost over $1 billion when he was forced to close his short position. Once again, Icahn had proven himself as Wall Street's ultimate warrior. In 2016, Icahn's influence extended beyond Wall Street when Donald Trump was elected president of the United States. Trump, a longtime admirer of Icahn, appointed him as a special advisor on regulatory reform. Icahn was now in a position to shape national economic policy using his decades of experience in business to push for deregulation and corporate tax cuts. However, his role was controversial. Critics argued that Icahn was too deeply invested in the financial markets and his influence in Washington could lead to conflicts of interest. Amid the backlash, Icahn stepped down from his advisory role in 2017. But by then, he had already made his mark both in government and on Wall Street. At 80 years old, most people would have retired. But Icahn wasn't done yet. His next moves would prove that even after decades of battles, he was still one of the most powerful figures in finance. By the 2020s, Icahn had cemented his legacy as one of the most influential investors in history. He had spent over 5 decades battling corporate giants, reshaping industries, and forcing CEOs to be accountable to their shareholders. But even in his later years, Icahn refused to slow down. Unlike many of his Wall Street peers who retired to a life of luxury, Icahn continued to hunt for opportunities, making billion-dollar bets and launching aggressive activist campaigns. His story wasn't just about making money, it was about changing the way corporate America worked. Even in his 80s, Icahn remained as aggressive as ever. In 2022, he took on one of the most iconic companies in the world, McDonald's. But this time, the fight wasn't about stock buybacks or executive pay. It was about ethics and corporate responsibility. Icahn launched a campaign against McDonald's over its treatment of pigs in its supply chain, accusing the fast food giant of failing to follow through on its promises to improve animal welfare. The move was surprising to many. After all, Icahn had spent decades focusing on financial gains, not corporate ethics. But his fight against McDonald's proved that he had evolved yet again. He wasn't just a corporate raider or an activist investor, he was now a business reformer, pushing companies to do better, not just for shareholders but for society. Even as Icahn approached 90 years old, his influence remained stronger than ever. His firm, Icahn Enterprises, continued to hold billions in assets, and his name still struck fear into the hearts of corporate executives. What made him different from other Wall Street titans was his mindset. He never saw himself as part of the elite establishment, he was always an outsider, challenging the status quo. He never played by the traditional Wall Street rules, instead he rewrote them. And he never backed down from a fight, whether it was against CEOs, billionaires, or even the US government. So, what is Icahn's true legacy? Some see him as a ruthless corporate raider, a man who destroyed companies for profit and left thousands of workers jobless. And that's the story of how Carl Icahn changed Wall Street forever. Others see him as a financial genius, a man who exposed the waste and inefficiencies of corporate America and forced companies to put shareholders first. But one thing is undeniable: Carl Icahn changed Wall Street forever. Before Icahn, companies were run for the benefit of CEOs and executives with little regard for shareholders. After Icahn, no CEO could ignore the power of investors. Because of his influence, shareholder activism is now a mainstream force in finance. Hedge funds, private equity firms, and activist investors all follow the playbook he created, the playbook of aggression, leverage, and strategic takeovers. His story is one of relentless ambition, bold moves, and an unshakable belief in the power of the market. Even now, as the financial world continues to evolve, one truth remains: Carl Icahn's impact on Wall Street will be felt for generations to come.